In this chapter, we'll discuss about NPA, non-performing assets. NPA is a very important topic in bank interviews. In fact, it's the most pressing problem that banking industry is facing today. At all levels, starting from finance minister to bank CMDs, everybody is focusing on NPS. Usually, there will be some questions on NPS in your interview. So, NPS stands for non-performing asset. Asset means something good, okay, something positive, because you'll get some benefit from it in future. So if you have gold or house or land, these are all assets because in future they have the potential to only give you income in future if you decide to sell them. For banks, loans are assets, right? Because bank has lent money to borrowers, it will get back interest and the principal also. So it is a asset. So loans are assets for banks and deposits are liabilities. So a bank borrows from depositors. So it has to pay the money back. It's a liability. The word liability means the state of being legally responsible for something. Okay, so bank is legally responsible to return the money. So deposits are liabilities. And asset means an item of property owned by a person or company, regarded as having value and available to meet debts. Okay, so for banks, loans are assets because they'll be repaid someday in future, and then amount can be used to pay off bank's own debt. So loans are assets to banks. So those are assets. Then what are non-performing assets? Technically, it is an asset, but it is not performing. It is not as valuable as it ought to be. In simple language, it means bad loans. That is loans where the borrowers are not repaying installments in time or interest in time. For example, you lend 5,000 to your friend, and he promised that he will return you in 1 month, but he did not repay you even after 6 months. It's a bad loan. For banks also, there will be many borrowers where they don't make repayments in time. They're called bad loans. Now, a small point is if they miss deadline by say 1 or 2 days, that is not a bad loan. RBI has defined some guidelines for NPAs. So let us see them. By the way, you also sometimes hear the term stressed assets, which is also the same as NPA. So, as per RBI norms, NPA is a loan or advance where interest or installment remains overdue for a period of more than 90 days in respect of a term loan. In case of working capital limits like OCC or COD, there is a different criteria. You need not, for different facilities there are different criteria. It's difficult to remember for you to remember all those. At least remember for a term loan. In respect of a term loan, a loan will be classified as NPA if the interest and or installment remains overdue for more than 90 days. Okay. For information, if you want to know how a working capital limit like cash credit, OCC, SOD is classified as NPA. If it is out of order for more than 90 days, it will be classified as NPA. Out of order means the balance remains continuously above the sanction limit. For example, you have sanctioned a limit of 10 lakhs and say the outstanding is about 10 lakhs continuously. You might ask how does the limit outstanding exceed 10 lakhs? When bank has sanctioned 10 lakhs, say the outstanding today is 9,90,000, only 10,000 balance is left. How can bank allow say more than 10,000? Because only that way that outstanding can cross 10 lakh, right? So why does bank allow? The question is bank does not allow. The company has to pay interest on the outstanding. Say at the end of the month, bank has calculated interest of say 50,000. So the outstanding balance is 9,90,000. Interest is 50,000. So that gets add up. So now it will be 10,40,000. This is not allowed by the bank. This is what the customer has to pay, right? So obviously the interest has added to the outstanding amount, and now the borrower has to pay more than 10 lakhs. So in those cases, that outstanding will exceed limit. Okay. So then it is out of order if that balance is continuously outstanding in excess of the limit for more than 90 days. Okay. So for different facilities, there are different norms. Just remember for term loan at least. So categories of NPS. NPS are categorized into 3 categories based on the period for which that asset is remaining non-performing. Substandard assets, doubtful assets, and loss assets. Substandard assets means remain NPA for period of less than 12 months. So this account has remained NPA for less than 12 months. It is known as substandard asset. Then there is something called doubtful asset, an asset which remains in substandard category for a period of 12 months. And the collection of the bank dues on the basis of currently known facts, it is highly improbable. Then we classify the doubtful assets category for 12 months. Now we start doubting whether we'll ever recover the dues. So we classify it as a doubtful asset. Then there is loss asset. Loss asset means the loss has been identified by bank by some auditors or RBI inspection, and the amount has been written off wholly. We'll see what write-off means later. But it's like this loan is of little value. There's very slim chance, in almost zero chance of recovery, and it's not really an asset from now on. It will be classified as a loss. So in NPAs, there are two classifications you have to remember very clearly: gross NPA versus NPA. Gross NPA is the amount outstanding in the borrower account in the books of the bank, okay, other than the interest that has been recorded and not debited to the borrower account. Gross NPA is the actual amount outstanding. NPA is the amount of gross NPA less interest debited to the borrower not recognized and amount of provisions held. All these are technical terms, but for simplicity, just remember that gross NPA is the actual bad loan. But as per rules, banks have to reduce profit if they're bad loans. How much to reduce profit is an advanced area called provisions for bad debts. Okay, for simplicity, let us take this example. See, we're putting it in very simple language. It's not entirely correct, but just to help you understand the point. Say a bank branch has earned a profit of 100 lakhs for the financial year 2017-18. Now this figure has to be shown in the balance sheet as profit. Now let us assume that the bank has bad loans of 50 lakhs. And as per rules, bank has to create provision of 20% on bad loans. So there will be some rules like RBI rules where for bad loans some provision has to be created. So 20% of 50 lakhs is 10 lakhs. Now this is the amount by which bank should report lower profit. So even though the profit was 100 lakhs, bank has to report profit of only 100 minus 10, 90 lakhs. Now that 50 lakhs is called gross NPA. And the reduced bad loans after provision, that is 50 minus 10, 40 lakhs, is called net NPA. So really, if a bank wants to can take a huge hit on the profit by creating provision fully, so thereby it makes net NPA 0. But rarely banks do this because most banks are listed on stock exchanges and reporting very low profit will have adverse effect on share price. Okay. Always remember that gross NPA is higher than net NPA because net NPA is after deducting provisions. You also have an idea for the NPA figures of Indian banks. We are providing figures as on December 2016. Please update yourself with the latest figures. The total NPAs, including those for public and private banks, is close to 7 lakh crores. These are figures as per key ratings. And as a percentage of loans, it's 9.3%. For public sector banks, this figure is highest, 11%. Which means 11% of all loans, the entire loans given to the companies are bad NPAs. That's a huge number. Okay. You need not remember the figures in this table, but just understand the problem is increasing over the years. NPS as a percentage of bad loans was just 3.5% in 2012. It is now close to 10%. In fact, some banks have NPS of more than 20%. That is really high. So in your interviews, at least try to remember NPA figures for the bank whose interview you are going to attend. Okay, and the overall industry NPA figure. That will be sufficient. Now, one thing you should be aware is the banks can hide NPS. Like, despite knowing that the account is not operating well, they're not repaying the installments well, banks sometimes sanction fresh loans or they do reschedulement, which you discussed, okay, to avoid the account becoming NPA. You have to understand that once account is recognized as NPA, there are a lot of headaches. It will have effect on the who has sanctioned this loan, who has appraised, who has done the processing, who has done the monitoring and all this stuff. So there will be inquiries, there will be no promotions, there will be salary cuts, even CBI inquiries in some big cases. So banks will be really hesitant to declare NPS. So what they do is sometimes they hide NPS by doing restructuring or sanctioning additional loans instead of declaring NPA. However, in interview, don't speak on this topic. Okay, if they ask can bank hide NPS, just say that don't say this all the above as if they're your own opinion. Okay, NPS are a very sensitive point, and your interview panel of senior bankers will not like it if you say this above point. Just say that you're not aware whether banks can really hide NPS, but you read somewhere that it happens. Just be tactful. So and then RBI measures. You might be asked. This is an advanced topic. Usually it will not be asked, but just for information, for resolution of NPS, RBI has introduced a number of tools such as corporate debt restructuring, strategic debt restructuring, and scheme for sustainable debt stress S4A. Of this, you should know CDR, corporate debt restructuring. That is important. That we'll discuss in a later chapter. Then you should also understand what is PNPA. PNPA stands for potential NPA. This is not NPA. As we discussed some rules, and RBI has some rules, right? If the account is out of order for 90 days or something. So that is RBI rule. But some accounts are not technically in that definition. As per the definition, they're not NPA as of today, but they're showing signs of some signals that it might end up as NPA very soon. So banks look for some signals like so this borrower is not is having more delays in repayment. He's paying installments, but is more delay. Sales are declining. There is some negative market talk about this company. So there's some early warning signals. Okay, this company might end up in NPA. So then those the accounts will be classified as PNPA. So what banks do is they rigorously pursue the company, so they can take early preventive steps so that this account doesn't end up as NPA. Or they can, if it is a genuine reason, they can reschedule the loan. They can take some corrective steps. So those accounts are known as PNPA. So in this chapter, the questions that you have to be prepared for is: what is full form of NPA? Define NPA. What is asset? Why is the loan an asset for a bank? What is liability? Why is the deposit liability for a bank? We discussed all this. What is meant by stressed asset? Is just NPA. What is the RBI norm for classifying? This is an important question. What is the RBI norm for classifying a loan as NPA? For term loan, it is 90 days. Like the interest or and a principal is remaining overdue for more than 90 days, known as NPA. How is the CC account or does the working capital limit classified as NPA if it remains out of order for 90 days or more? What are the three categories of NPA we discussed? What is substandard asset? What is doubtful asset? What is lost asset? What is gross NPA? What is net NPA? What is the difference between these two? That is an important interview question. We discussed that. What is the provision for bad loans? The provision for bad loans is like, if a bank has bad loans, a certain percentage of that has to be, bank has to create provision, and that gets knocked out from the profit. Okay, that is known as provision. Difference between gross NPA and NPA, which is higher, gross NPA and net NPA, always gross NPA is higher. Okay. What is the approximate gross NPA figure of Indian banks? This we have discussed. Please update yourself with the latest figures. Name some banks which are high levels of NPA. This we have, you can see in the table which are provided, but also update with the latest figures. What is the NPA level of your bank? So for the particular bank whose interview you are going to attend, just go to the website and see the latest performance. Every bank in the website, they'll have investor relations tab. Okay, go to that and then you'll see some recent press releases, the latest quarter financials. They will have the NPA figures. Can banks hide NPAs? What are some tools RBI initiated for resolution of NPAs? What is PNPA? What are some signals that the account is in problem and may soon become NPA? So this we discussed, right? So the company is facing trouble paying installments just before the 90-day period. Maybe just about it is going to become NPA. Maybe on the 89th day or 88th day it is paying installment. Just to avoid getting NPA. It's not making timely payments, declining sales, and all these are some signals that account might be in problem and might end up in NPA.